Ladies and gentlemen, Mario Galdos, your bald guy with the bow tie from the Triton Group at Legacy Mutual Mortgage, bringing you your tip of the week. This week, we are going to be talking about the 30-year fixed rate mortgage trend for the last 30 years. Reality is that, again, a lot of folks right now are really kind of getting apprehensive to purchase because they're worried about where the market's going, what it looks like, what's going to happen. I'm here to reassure you that everything that's happening right now, although unique for 2022, is something that we have seen as a trend in the past. In fact, over the last 30 years, we've seen rates as high as 6 and 7%. When I first started in the industry over 17 years ago, I was quoting rates at the 7s, 8s, and 9s. And so I'm showing a chart here that basically tells you that, we've seen that, those rates dip all the way, 2013, 2014 into the, mid 3% range, and then go back up, and then we go back down again over time. Like 2015, 2016 there was an increase, dropped again in 2017. 2019 there was an increase above 5%, and then we had the pandemic hit and saw the all-time lowest rates. Now, with the recipe of things that are happening right now, of course we're combating inflation, hence why the Federal Reserve is increasing rates. We're also trying to reduce balance sheets for the money that the Federal Reserve invested in mortgage bonds and mortgage-backed securities. What I'm here to tell you is that a recession is going to happen. I mean, we're looking at 12 to 18 months for this to happen. And although most folks get a little worried about what a recession truly means, again, a recession is a slow of the economy, and so what would happen is it's not going to be like the 2008 recession that we saw, the housing bubble, we saw the housing market crash. Again, we have the opposite problem right now. In 2008, we had an inventory surplus. Right now, we have an inventory shortage and a very, very high demand. We expect that demand to stay high, and again, it's going to take a while to rebuild that inventory. When the recession happens, I'm anticipating rates go back down. And so again, this is a strategy that we're implementing right now in all of our home buyers pursuits. We're looking at not buying discount points to try to lower that interest rate. A lot of folks are trying to get the lowest rate. They're willing to pay a whole bunch of money up front to get the lowest rate, when in reality, that is not the best strategy. I think the best strategy right now is to take the rate that has the least amount of cost so that you can focus on maybe refinancing here maybe 12, 18 months down the road once rates drop and a recession occurs. And so again, when you buy points, there's cost recovery involved in those discount points. And again, that takes time to recover. Mostly, it could take 4 to 5 years. If you were to refinance in a year to a year and a half, you'd end up having lost or spent that money and never getting it back. So again, we want to educate you. Give us a call if you have any questions, 210-476-5523. You can visit us online at TritonGroupHomeLoans.com or send us an email to TritonGroup@LegacyMutual.com. I want to wish each and every one of you a very happy and safe Easter weekend. We will be closed in observance of Good Friday, and we'll reopen on Monday. We look forward to talking to you soon. Have a great one.